Good morning, I'm Steve Forbes and this is 90 at 9, brought to you by interest.co.nz. This is where you get everything you need to know in 90 seconds at 9 with news. The US domestic economy has slowed more than initially thought. Figures released on Thursday show the US domestic economy slowed more than projected in the fourth quarter of 2018, coming in below the Trump administration's 3% annual target, and corporate profits were also down as well, failing to rise for the first time in more than 2 years. The data released overnight shows GDP growth for the first quarter was 2.2% and down from the previous estimate of 2.6%. While US pending home sales also fell, down 0.1% in February from January and down 4.9% for the same month a year ago. This comes on top of signals last week from the Federal Reserve that it has abandoned any plans to raise interest rates this year, while the return of an inverted US Treasury yield curve late last week has also dampened markets. The 3-month US Treasury yield exceeded the yield on the 10-year note last Friday for the first time since 2007 and is often seen as a signal of an impending economic slowdown or recession. Wall Street has swung between gains and losses today as optimism over the US-China trade talks has been tempered by the threat of an economic slowdown with the fourth cut in GDP growth. US Trade Representative Robert Lighthizer and Treasury Secretary Steven Mnuchin are in Beijing today for a new round of talks with Chinese officials which are aimed at ending the ongoing trade war between the two countries. Meanwhile, the World Trade Organization says the United States has ignored a request to halt subsidies to Boeing. It's the latest development in a 15-year-old transatlantic trade row with the EU, which appears to be getting closer to tit-for-tat sanctions. In Europe, inflation figures released in Germany were weaker than expected. Consumer prices rose an annual 1.4%. It comes as the EU policymakers are battling with how to address a lack of consistent price inflation despite years of stimulus. While the European Commission overnight published the Business Climate Indicator, the survey of European businesses showed declining business confidence. China has entered the latest trade talks with Premier Li, talking about the steady and positive state of the Chinese economy. Despite such optimism, figures released this week suggest the trade war with the US is starting to bite. Chinese manufacturing profits fell by 15.7% year on year, while profits from oil processing companies fell 70.4%. Equity markets are little changed today in either Europe or on Wall Street. Yesterday, both Tokyo and Shanghai closed sharply lower on the day. Hong Kong was little changed, while Australia was up 0.65%, which was unusually higher, and New Zealand continued its remarkably strong run, up 0.7%. In fact, since the start of the year, the NZX 50 is up 12%, and that is after being up almost 5% in 2018. It's quite a run, probably fueled by the rising flow of KiwiSaver funds looking for a home in a small market. The US 10-year Treasury yield has held overnight at just on 2.38%, while their 2 to 10-year curve is now up 13 basis points, while their negative 1 to 5-year curve is down 24 basis points. The Aussie 10-year is down 5 basis points at 1.76%, and the Chinese 10-year is up 1 basis point to 3.1%, while the New Zealand 10-year is down a disconcertingly large 11 basis points to 1.78%. Gold, however, is down sharply, down to $23 to $1,289 an ounce, and your US oil prices are little changed today and still just under $59 a barrel, while the Brent benchmark is just on $68 a barrel. The Kiwi dollar is little changed from this time yesterday, it's 67.9 US cents. On the cross rates, we are unchanged too at 96 Australian cents. Against the euro, we're at 60.5 euro cents. That leaves the trade-weighted 5 at 72.6. I'm Steve Forbes, and that was 90 at 9, brought to you by interest.co.nz.